Hello, good morning everyone. Today we are going to solve the information about the bond valuations. Before we solve, we need to know about the basic concept of bond and bond valuation. Firstly, bond is those long-term promissory note. Bond is those long-term promissory note which is issued by issuer company for payment of certain principal of amount and receive a certain interest rate within a fixed period of time. That's called a bond. Shortly, you need to know about the basic concept of bond. For the definition, you need to write onto your copy focal point about the bonds. Bond is those long-term promissory note which is issued by large corporation and government for the purpose of raise a fund or fundamental of investment. The features of bond, basically bond have a specific, it means that principal amount have a principal amount and its interest with specific maturity period. That's called a bond. Bond is those long-term promissory notes. You need to know about the basic concept of bond. Then you need to focus of this definition. Bond is those long-term promissory notes which is issued by large corporation and government for the purpose of raise a fund or fundamental of investment. Bond have a principal amount and its interest with specific maturity period. That's called a bond. Then we need to know about the basic features of bond. What are the features of bond? Bond features of bond. After knowing about the definition, then that you can define or you can write the features automatically like that. Bond features is long-term nature. Okay, bond nature is long-term. Natures means features. First one is, second one we have a bond have a principal amount and bond have a interest rate, principal amount and maturity period. Okay, we need to easily find out the features of bonds. Don't write system, please. Knowing, understanding from this definition like that. First one is par value. Always bond par value is 1000. Okay, always par value is 1000. Next one we have a interest rate. Okay, we have a fixed rate of interest when company issued that types of bond, so that we can see when we find out, wherever we can find out the bond like that, percentage, certain percentage, 8 percentage, 10 percentage, we can see onto our book. Okay, the features of bond. Okay, interest rate is fixed interest rate. Then what? Then next one is specific maturity period. Specific maturity period means when the agreement between lenders and borrowers, the payback periods are when the principal amounts fully payments final year or final periods, that's called a maturity period. Maturity period. This one also fixed or specific according to their loan natures. Okay, we have like that straight bond. You know, straight bond are those bonds which we unable to convert it onto one form to another. Okay, which we unable to convert it into one form to another. What does it mean, one form to another? Okay, that means bond is converted into share. Okay, we unable to convert it from bond to share, that's called a straight bond. Okay, we have these questions in 2007-3 like that, you can see onto your old is gold. These types of questions also asked into your examination, so that you need to know about the principal features or key features of bond. Par value, which have a thousands, always thousands par value, and interest rate is fixed, which is determined by the issued companies. And next one, maturity period. Maturity period is also fixed, but which have like that 10 years, 20 years, 30 years, 40 years. Okay, it might be different according to their rules and regulations. And the next one is bonds payable age. Bonds payable age, long period of time. Not the short period of times. The features of bond is over here. Are you clear about this concept of bond valuation? If you have any query, you can ask to me. Firstly, you need to know about the bond, and next one, features. Now I want to go to about the bond valuation. What does it mean? Okay, you need to know about the concept of bond valuation. Bond valuations means the amount of bond or the return of internal rate of return of bond identification procedures, that's called a bond valuation. You know, bond valuation is, okay, you can write onto your copy please. Now I want to go to write about this bond valuation. What does it mean exactly? Okay, bond valuation. Okay, bond valuation. Bond valuation means the internal rate of or intrinsic value of bond to identify the internal rate of return of bond is called bond valuation, which is measured on the basis of rate of interest rate and its maturity period. From these different kind of formulas, okay, we have several kind of or types of bonds, zero coupon bonds, perpetual bonds, and long term others. So many types we have, but we can calculate perpetual bond, callable bond, and zero coupon bonds. We need to solve onto our syllabus. Okay. Now I want to go to write about the information of bond valuations formula like that. Are you clear about this information? Bond valuation is to identify the internal rate of return of a bond. Okay, to identify the internal rate of return of bond procedures, that's called a bond valuation. Okay, if you have any query, you can below the comment onto the commentary box. Now I want to go to solve the questions 2074. Let's have a look onto your book, please. I have got a information about the 2074 question number 14. Okay, 2074 question number 14. 2074 question number 14. Okay. Okay, let's talk about the information of these questions. The given information of 2000 these questions: Makalu company's bond have a 14% coupon rate. Okay, Makalu bonds, Makalu company's bond interest rate or coupon bond, coupon rate is equal to 14%. The interest is paid annually and bond mature in 12 years. The maturity period of bond is 12 years. Okay, maturity period N is equal to 12 years. 12 years. Next we have a their par value is Rs 100. Par value we can call like M is 1000. Next one, the market interest rate 10%. Market interest rate. Interest rate. Market interest rate, that's called KD, cost of capital, or K, we can call a K is equal to 10%. 10%. Next one, calculate the value of each bond at present value of bonds. If bonds are selling at 1100, would you purchase the bond? Okay, now find out for given information bond value B0 is equal to what? That's called a B0. We know that B0 is equal to I PVI of AK percentage N years plus M PVI of K percentage N years. You can see on your copy, against this formula you can find like that: I 1 minus 1 divided by 1 plus I cube power N, or KD, you can write over here KD, K power N whole divided by K plus M 1 divided by 1 plus K cube power N. You can see on this types of formula onto your book. Against this formula, in what circumstances can use this formula and in what circumstances it needs to be used. Okay, firstly, if the rate of return like that 10.5 against 10% against 10.5, that's this 10.5 value is not our PVIF tables or financial tables, then that's we need to calculate these one formulas. Otherwise we have a 10%, it is already calculated over onto the financial table, then that's it doesn't require that type of formula because it might be lengthy. Procedures is same but it might be lengthy for calculation, so that you can use this formula. Okay, Okay, write down over here. Firstly, you need to determine the I. I means we have a 14% and the face value. Always you can find out the interest rate from this formula like that. Okay. Interest amount is equal to interest, that's I means interest amount. Interest amount I is equal to 14% of M. M means 1000 par value. We have 1000 into 14 divided by 100 is equal to 140. And put up this information over here. KD means K, that's you need to write over here. Don't write 14%, then that might be wrong. It only provide for the amount of interest. Okay, don't forget. I 140, PVI of A, K means we have a 10%. Number of years, how many years? 12 years. 12 years plus M means 1000. PVIF, yeah, PVIF, K percentage we have 10% and 12 years. Okay, 140 into, let's have a look about the financial tables into your book. Okay, we can find out the PVI of A. Firstly, you need to know, you need to write into your PVI of A. PVI of A, we have a 10%. How many years? How to see this information? Let's have a look. These rows provide the percentage and this column provide the number of year. Okay, this provide the number of year, these rows provide the percentage. We need to see these factors of 12%, 12 years 10%. Okay, 10% means 6.8137, 8137 plus 1000 into PVI of, it is PVI of it, that's the annuity, and it only is a single years. Okay, PVI of. Okay, let's have a look onto your copy. Same as 12 years 10%, 12 years 10%, it means 0.0429, 0.0429. Okay, calculate quickly onto your calculator, please. Do fast. 140 into 6.8137. okay, 953.918 plus 0.0429 into 1000 is equal to 42.9. okay, please add this information. 953 point, okay, PVIF 10%, that's, this one is wrong. Might be PVIF. Okay, that's a wrong information right over here. Please, once again, please change your 0.31 0.31 0.31 86 or that's multiplied 31 8.6. okay, please add this information quickly. 953.918 plus 318.6. okay, 12 72.518. The present value of this bond is Rs 1272.518. The market price, let's have a look. The bond price currently your 1272.518. Then that's questions asked for us about the information. If the bond sale if the bond selling price in market is equal to 1100, then that's you can purchase or sell. Okay, your present value of this bond is 1272.518, but you can sold onto the market just only 1100. At that times you need to hold or you need to purchase of bond, because compare with the market value is lower than the present value of bond is higher than market value. Okay, therefore we can purchase of bond that is 1100 is less than, I mean that's the market value is less than current value of bond 1272.518. okay, therefore this answer is enough. And next one, the question provide the information about does the value of bond increase or decrease if market interest increases. Okay, firstly you need to know about the understanding, that's the market interest rate. Market interest rate and bond value is inversely affected. Bond value and market interest rate is inversely affected when the market interest rate is increases, like that the given information, when the value of just to the given information provide for this information like that, the value of bond change inversely with the change in market interest rate. So if the market interest rate increases, the value of bond. Okay, write down onto your board. Okay, how to solve it? If the market interest rate is increases, the value of bond is decreases. Therefore the relationship between them, it was differentiate like that, bond value when the market interest rate and bond value is decreases. Okay, you can write onto your copy. This one is the which required B's solution. If the market interest rate is increases, the value of bond is decreases. Okay, when the market interest rate is rose, then the value of bond is decreases. The relationship between market interest rate and bond value is inverse relationship. Okay, you can write onto your questions. Okay, next question we have 2000 2072 73 second year question number 7a. Okay, write down selling price, bond selling price. 2073. Okay. How to solve it, the informations like that. Suppose Sikhar company 2073 second year, question number 7a. Okay, given information we can write onto our whiteboard. Suppose Sikhar company just issued bond with a 10 years maturity, ORS 1000 par value. The bond's par value is 1000. 10% coupon rate, that's the interest rate, and the annual interest payment, if the market interest rate is, that's called a carry, 12%. What price would the bond sell? Okay, B0. Okay, price, selling price, you can find the given information right and over here. M par value of bond is equal to 10%. Maturity period M is equal to, par value, this one is M is 1000, this one is maturity period is, we have 10 years. Next one we have, if the market interest rate is 12%, coupon interest rate I is equal to, we have 10% of face value 1000 is equal to 100 RS. Okay, coupon interest or interest amount, and then that market interest rate. Market interest rate K is equal to, we have 12%. Bond selling price is equal to what? It means that B0. We know that B0 is equal to I PVI of A K percentage N plus M PVI of K percentage N. Please, I is 100, PVI of A, K means 12%, N years means 10 years, plus M is 1000, PVIF, K percentage N means PVIF, 10% 12 years, 12% 10 years, 12% 10 years. Okay, 100 into, please show the table, please. We have got PVI of a 10 years 12%. Okay, 10 years 12%, 12% 10 year. Okay, 12% 5.6502 plus 1000 into PVIF 12% 10 years, PVIF 12% 10 years. 0.3220. 0.3220. Okay, write down onto your copy and solve the information. We have 565.02 plus 322 is equal to this. Yeah, the information 885.87. 565.02 plus 322 is equal to 887.02. The sales price of bond is equal to. Okay, that equation is the final answers of 2073. That's enough. Questions required for us this information. Okay. Okay. Then you need to do about the coming of next days. I will provide the compounding interest payment system onto their bond valuation procedures. Coming up next episode, I will provide this information and we will solve coming up next questions, so that you need to write or you need to solve similarly like that 2071 question number 9, similar question 2071 question number 9, 9A. Next one you need to do 2072 question number 8, and similar with next one we have shaming over this one effective, this one, not this one, not this one. Next one we have price 2058 F 2058 58C. Next one. Okay, that's enough. This one you need to solve onto your copy, and I will check your copy, and then remaining this video will upload it onto my YouTube channel. You can see over here if you have any confusions, and then that you can repeat it about this information onto your working procedures. Coming up next week, I will teach about the YTM, approximate YTM, and callable bonds. About the informations will be calculated over their periods. From these periods, you can solve these questions. I will provide remaining formula with remaining solution onto your onto our classes. Okay, bye bye, see you, have a good day, stay safe, and you can find out this video onto my YouTube channel like that. The name of is Kandel like that, KANDALEDU.NP. okay, you can search this channel onto your YouTube, then you can find this solution. All the solution will be uploaded onto this YouTube channel. Okay, bye bye, see you, have a good day.